As Boxing Day and January sales continue, Australians are spending up. More and more of them using buy now, pay later services of Afterpay, Zip and Klarna. It's interest-free if you pay on time and billed as a win-win for customers and merchants, small businesses. But is that right? Business editor Ticky Fullerton investigates.
On the 21st of December, buy now, pay later business Afterpay officially became one of the top 20 ASX-listed companies, valued at around $30 billion. Afterpay pays no dividends. In fact, it's yet to turn a profit. But clever old you if you'd managed to pick up Afterpay shares in around May, because since then they've gone up 1,000%. That's around 10 times in value, and both its co-founders are rich listers. Together with Zip, the two firms are household names in Australia and making inroads into the US, driving the shift away from interest-charging credit cards. BNPL allows buyers to take goods up front and pay off the bill, typically in 4 payments over about 8 weeks. The pandemic shutdown just boosted buy now, pay later. Afterpay's Anthony Eisen spoke to us after his August annual results.
We've been seeing the shift online pretty consistently. We've seen that accelerate in the last 5 months, and I do see that as structural.
Rival Peter Gray at Zip had the same story, signing up Bunnings and Officeworks, and now Harvey Norman to cash in on the move to work from home.
I think certainly for Zip, we're really well placed for another huge 2021. I think the business model thrives in strong economic conditions. We've also demonstrated it's very strong in economic uncertainty. So we're building very, very strong momentum both here and in the US market.
It all sounds great, but who takes the downside? For consumers, the hit comes if you can't repay. Regulator ASIC's November report found 1 in 5 users missed payments, with others cutting back on basic items, including meals, to make payments on time. So far, buy now, pay later operates outside the responsible lending laws of the Credit Act.
The average transaction value with Afterpay is $150. The average balance outstanding is no more than $200. So from a consumer responsibility perspective, our default rates have actually gotten lower over this period.
Zip has conducted ID and credit checks since day one. We're delivering significantly better outcomes than traditional credit products such as credit cards. So we don't necessarily see consumer harms requiring legislation or regulation at this stage.
But buy now, pay later is expanding well beyond tops and sandals in the local mall. And that worries small business ombudsman Kate Carnell.
Things like cosmetic surgery, which concerns me because it does encourage, I have to say, possibly younger people to buy products that maybe they can't afford, or they're moving into things like solar panels for roofs and other things.
Oh, well, it's huge concerns. Even more recently, there's a company which is now selling buy now, pay later to get into the investment property market, which is fractional investing and quite a complex product. So you can get buy now, pay later between $0 and $30,000. And who knows where that upper limit might end, because there's a loophole in the law and financial companies are essentially driving a truck through it.
We talk a lot about consumers, but where buy now, pay later makes all its money is not the consumer, it's the merchant, the retailer. And the fees that buy now, pay later charges put credit cards in the shade.
From a small business perspective, from a merchant perspective, they're paying the cost of this. With a credit card, as you know, a merchant will pay maybe 1.2%. It varies depending on the size of the merchant. With buy now, pay later products, you're talking about 5, 6, 7, even 7%.
But can't small business pass on some of this fee through to the customer?
Actually, no, because the contract between the merchant, the small business, and the buy now, pay later company precludes them from charging an extra amount of money, a surcharge. You know how sometimes when you give a credit card, they'll say, well, look, there's a credit card surcharge, 1.2%, 1.3%. The buy now, pay later people or businesses preclude merchants from doing that. So they have to wear the whole cost.
The Reserve Bank regulates payment systems. But unlike credit cards, Governor Philip Lowe has said buy now, pay later can continue to prevent small businesses adding a surcharge, at least for now.
We're of the view that regulation is not required because there's no consumer or retailer harms. Any commercial arrangements that we have with our retailers should be subject to our contractual arrangements.
Well, it's a debate that the buy now, pay later industry is winning at the moment. Whether they'll win it in the long term is to be seen. Philip Lowe says that buy now, pay later is still a very small proportion of the payment market, and he's right about that. But it's also worth going back to the Royal Commission, which we should not forget is only a year or so ago. And one of the things Commissioner Haynes said was, don't create loopholes in the law. And that's what we're doing.
The dilemma for small businesses, can they really afford to sit this one out? More and more customers are using Afterpay or Zip or Klarna, and Buy Now Pay Later argues that retailers shouldn't think of this as financing costs. They should think of it as marketing, creating new sales. And a Facebook might be charging 10% for that. Others warn that business will find Buy Now Pay Later is increasingly part of the core business, that fees will become a new cost of doing business.
Look, I think regulators need to have a look at this from a competition perspective, what this is actually going to mean in a marketplace. Is this literally just a movement of cost, shall we say, to small businesses? But I have to say, these things have been set up in a way that it's going to test regulators in what they can actually do about this generally.
COSBOA, the small business peak body, is running a survey to find out what small business really think of BNPL. As for the big banks fighting to keep customers, well, if you can't beat them, join them. 2 of the big 4 have joined forces with Buy Now Pay Later.
So we've got CommBank with Klarna. We've got a couple of the banks introducing no-interest credit cards, which are effectively trying to compete with Buy Now Pay Later products, the same payment mechanism. Then we've got Afterpay, which is partnering with Westpac, which is essentially going to start offering banking services white-labelled by Westpac.
In October, Westpac changed horses, selling out of Zip and buying into Afterpay.
I think the banks are certainly looking at how do they get a share of the millennial and newer generation market. How that works out for them, the speed they operate with remains to be seen. Obviously, we have had a taste of some of that with Westpac. We wish the other competitors luck.
There are a lot of fees to fight over. The question for 2021 is, as Buy Now Pay Later becomes more and more of a force in finance, will it be fully regulated? Let's hear from the big banks.
I'll leave that to the regulators, but you've got to say, is it a credit tool? If you're actually allowing customers to take the goods away now without actually having paid for them, sounds like credit to me, but I'll leave that to the regulators.
I think that's an open question from a credit perspective and a payments perspective. So everyone's very focused on the Afterpay transaction, but if I step back, it's about banking as a service. There's more banks than Westpac that are going to offer that service. Some are closer than others, and customers are certainly looking to interact with financial services companies in different ways.
I think also there is incumbent on lenders some sort of responsibility. And I think if you looked at the figures, and I've seen them, that most people who go into a buy now, pay later situation as effectively a borrower think it's interest-free. Well, of course, it can't be interest-free. It just doesn't work. Even at low rates of interest, it can't be interest-free, because at the moment it's not an enormous part of the borrowing and lending situation. But I believe over time it's got to be well looked at, and I think policed, to make sure that it's done properly.
Ticky, Fullerton, Sky News.